those are our top stories, but let's invite our expert for the afternoon, Hemant Rustagi of Wiseinvest Advisors, joins in to answer all the queries that are being sent in by our viewers. So Hemant, good afternoon to you. Let's get started. We have our first viewer on the line with us. Varun Nuti calls in from Hyderabad. Hi Varun, how can we help you?
Hello, I've recently invested in 4 mutual funds.
Okay.
SBI Focused Equity, SBI Blue Chip, HDFC Mid Cap and ICICI Balanced Advantage.
Okay.
I want to know if my portfolio is okay or do I need to change something.
Okay, and as I understand it, you're just 32 years old. So is this a new portfolio that you've started? I mean, these 4 funds,
yes.
is this your entire...
Recently.
This is your entire investment, right?
Yes.
Okay, so first up, congratulations, you've taken the first step, Varun, so that's a good thing. Hemant, he's bought in 4 funds. It says he's just about getting started, but do remember that he's just 32, and therefore this portfolio that he has, which is skewed towards equity, does it work out for him in the long term?
Well, absolutely, Sumaira. I think you're absolutely right. I mean, even when you start investing, many times you're worried about the fact whether I should be investing all my money into equity or not. I think that's not the point. The point is, what is your time horizon? If you're investing for the long term, there is no harm, especially when you're investing through SIP, for example, because you're committing to invest some every month. So what it does for you, it allows you to benefit from averaging. So I think as far as the equity funds are concerned, I would say the fund selection is good. Only issue is you have one fund, ICICI Balanced Advantage Fund. Now, this is a good fund in this category. It's a fund which has restricted exposure to equity. It's good for if your time horizon is 3 to 5 years. But if you're investing for 15, 20 years, you need to actually increase your allocation to equity. So in that case, my recommendation to him would be that he should actually stop investing in that fund. If time horizon is 3 to 5 years, he can continue. But if, like he said, if he's investing for the long term, then my recommendation would be that he should exit from that and he should be looking at some good quality multi-cap fund. You can look at Kotak Standard multi-cap fund, or you can look at Access Focus 25 fund. One of these funds you can add in your portfolio. The remaining 3 funds which you have in the portfolio are pretty good, so you can continue investing in those.
All right, so that is the advice coming in for Varun Nuti. With that, we move on to the next one. We have Puneet Sood calling us from Punjab. Puneet, go ahead.
Yes, sir. Good afternoon.
Yep. Tell us, Puneet.
Sir, I just wanted to confirm, should I go with the SIP route or go with the ULIP fund?
And
I have a time horizon for 8 to 10 years.
8 to 10 years. Puneet, we understand that you are 38 years of age, and what are your financial goals?
Actually, I'm searching for a financial goal for the education of my daughter. She will be graduating in next 10 to 12 years.
All right, congratulations on that noble cause that your goal is education of the daughter, 10 years. Hemant, what would you suggest? SIP is the best route or ULIP? ULIP in any form, is it a good route for investment, or should one take insurance as just a term insurance plan and invest elsewhere?
Well, I think it's the question that he has. I think there are 2 important aspects here. One, he's talking about investing through SIP. So let me just clarify for him that SIP is just a mechanism that allows him to invest on a monthly basis in any pre-decided fund. It could be a balanced fund, it could be an equity fund, or it could be a debt fund. SIP by itself, Puneet, is not a product. Whereas if you look at ULIP, ULIP is a product, it's investment income insurance product. Okay, so since you're talking about a time horizon of 10 years, you can take risk and you should be actually investing in equity funds. So if I were to compare equity funds with ULIP, I think equity funds definitely score over ULIP in many aspects. One, I think the performance can be better, the cost is much lower, and there's more flexibility because if you want to make changes, you can make changes in that. So I think it's very clear that, if you're looking at 10 years, you should be looking at equity fund. But I think another important aspect we need to look at is, are you looking at saving taxes? If that is the thing, then you should be looking at equity-linked savings scheme, ELSS as a category in mutual fund, where there you can save tax under Section 80C. So if your intent is also to save tax and invest in equity, then you should look at ELSS. I can recommend 1 or 2 funds for you. You can look at Access Long-Term Equity Fund or IDFC Tax Advantage Fund. But if 80C is not a consideration for you, then you should be looking at good quality multi-cap funds. So you can look at, Motilal Oswal Multi-Cap 35 you can look at, and then you have Invesco Contra is another fund that you can look at, or L&T Emerging. There are 3 funds investing in different segments of the market. Depending on the amount that you want to invest, you can choose 2 or 3 of these funds and start your investment process.
Okay, so Puneet, your query, as I understand, like Hemant was asking, do you have any tax purposes because of which you're asking this question?
Ma'am, tax is extra bonus if I want it.
Okay, so perhaps a mix of ELSS and just some regular straight up.
I got my point. If I want to save taxes also, then I will be going with ELSS only.
Yes,
exactly. Puneet,
but the main query was what is more beneficial out of the two?
Well, Puneet, like I explained to you, equity funds are much better than ULIP. Okay, I've told you some 2-3 parameters on which I believe that these are much better, because ULIP will be more costly. And what happens is an investment cover insurance product. So you don't even get the kind of insurance cover you should be getting. You should be looking at a term plan for pure risk cover and then look at equity funds. So look at a combination of term plan and equity fund, which will take care of both your risk management as well as your investment portfolio.
Yeah. So Puneet, basically your basic query remains that SIP is a way through which you can invest in any sort of mutual fund. It's just a method, which means that every month or every quarter at a fixed interval, you'll be putting in a certain amount of money into your selected mutual fund. ULIP remains a unit-linked insurance plan where what you pay, a part of it goes towards your insurance premium and the rest of it is invested in a fund. So you're not getting the best benefit of either getting a cover or getting returns from a fund. So I hope that now answers your query. Up next, we have Sahil Shah, who writes to us. He's written to us on Facebook, in fact. He wants to invest 50,000 rupees via SIP for the next 15 to 20 years. He wants to know which are the funds that he can invest in with a moderate risk. So Sahil, I wish you had given in some more details as to why you're looking for moderate risk, because you are looking at 15 to 20 years. But I'm assuming, Hemant, that perhaps he's an older gentleman and therefore just not very comfortable with the idea of high risk. I mean, that's my assumption. I don't know.
Well, I think there is slight contradiction in what he says. Right. His time horizon is 15 to 20 years. That means he should be in a position to take risk. It doesn't matter what his age is. The time horizon itself allows you to take some risk. When you talk about moderate risk, what happens, we need to understand there are two risks that we take when we invest our money. One is we don't want to lose a part of our capital. The second is inflation, which I believe is a much better, much serious risk, especially when you're investing for the long term, because you need to earn positive real rate of return, which is gross return minus tax minus inflation. So I think if you invest in equity funds, well-diversified equity fund, good quality funds for 15 to 20 years, I think there is no reason that you need to really worry about what will happen to my money, because averaging is what you will benefit from because you're investing through SIP. So if you continue this investment process for 20 years, and I'm assuming annualized return of around 12%, I think you should be able to build a corpus of 5 crores. So I think this is what is the power of compounding that does, especially when you invest for long term. A couple of funds I'm recommending to you. Some funds I've already mentioned, like Kotak Standard Multi-Cap is one you can look at. HDFC Small Cap, again, because when you're investing for the long term, you must have the right combination of exposure to different segments of the market. And third one can be Axis Focus 25 funds. So look at these 3 funds, invest your 50,000 every month, continue your investment process for 20 years, irrespective of the market condition, because there are going to be many periods during this 20 years where you feel that you see the market volatility the way you're seeing right now. I think you need to ignore that, continue your investment process. Like I mentioned to you, you should be able to build a corpus of 5 crore or more.
Okay, well, I just have one thing to say. Sahil's query was contradictory, and just now on Twitter, somebody has written to me, Rivka Chauhan. She's 19. She wants to know which are the good debt funds. So once again, I think investors are actually just looking at things they might have heard or people might have spoken about and not actually aligning it to their goals. I mean, perhaps must have read an article or spoken about how debt funds were back in action or back in fashion, and therefore, but my advice really to everyone is that align it to your goals. Don't just look at ad hoc manner of investment. Look at asset allocation, look at portfolio management, and the best thing, of course, is take advice as and when you can. A quick break. We'll be back with more in just a bit.
All right, just keep an eye on individual stocks from the frontline space. L&T, the big boy from the capital goods sector, reporting its first quarter numbers tomorrow, and the stock is at the high point of the day sitting with a gain of almost 3.5% as we speak. Add to that, we have something like a Tata Motors, which is moving higher. But Indiabulls Housing Finance, that one also has moved well all through the day and currently sitting with a gain of 5%. At the high point of the day is Indiabulls Housing Finance. Individual stocks doing well. The Nifty Bank, though off the lows, still in the red as we speak. Let's move on to the next query that we have from Rajesh Shahi. He's written to us on Facebook, has investments in Axis Multi-Cap Fund, Direct Growth, and Kotak Select Focus Fund, Direct Growth. Wants advice on should he continue with the SIP or look at one large cap fund. So he's got money in 2 growth focused funds. Should he also look at one large cap fund or should he take money out of these and put it in that large cap fund?
Well, both the funds where he's investing right now are multi-cap funds, but both the funds have a bias towards the large cap. Okay. So I believe that, almost 80-85% of his money is already going into the large cap. So if at all he's looking at adding one more fund, my advice would be to add one quality mid-cap fund or a fund which invests in a combination of mid and small. Because, like I said earlier, I think it's very, very important not only to stay committed to a time horizon when investing in equity, it's equally important to ensure that you have the right balance in terms of exposure to different segments of the market. So I would say, I did mention about a fund, L&T Emerging Businesses, the fund that you can look at. So you can add one more fund, add in mid and small cap category, rather than adding a large cap fund.
All right, up next, Chanda Mandral Bisht writes to us on Facebook. She has invested in a few funds. So they are L&T Emerging Business Fund, Aditya Birla Sun Life, HDFC Mid Cap Opportunities, Kotak Select Focus, and the ICICI Blue Chip Fund. She wants Hemant to assess her portfolio and wants to know where she can invest an additional 25,000. So Chanda, I wish you had given us some more details to work with, but Hemant, this is what she had. It looks like a decent mix of funds. She's now looking to put in a further 25,000. I'm assuming this is an SIP of 25,000. Should she look at one of these funds, or would you recommend an entirely different fund?
I think she already has 4 or 5 funds, and I think she has a time horizon of 5 to 7 years before she retires. So I think the time horizon is right. Continue investment in that. If I look at the mix of funds in your portfolio, you have Birla Top 100 Fund, which obviously the name has changed now. If you look at that fund, maybe instead of that, you can look at a contra fund, Invesco Contra Fund, because that will bring in different style of fund management in your portfolio. And the investment that you want to do additionally is you can do an existing fund. You don't have to add too many funds because over diversification in the portfolio is not going to help you. Another important thing I would like to mention clearly here is that when you approach your retirement age, maybe a year or 2 before, systematically try rebalance your portfolio, because then you have to prepare your portfolio for income generation. Right now, it's focused more on creating growth. So there, once you're approaching your retirement age, what you need to do is make sure that your portfolio is towards income generation. You still need some growth. So look at hybrid funds, which and then opt for a systematic withdrawal plan, wherein every month you can draw some money. Despite being market-linked product, you still get some money on a regular basis, as much as you want every month. So continue with these funds, make one change, additional money, invest in the existing funds, rebalance your portfolio just a year or 2 before your retirement.
All right. In fact, we have a clarification that has come in from Rivka. So it looks like she's listening to us. She says that she is actually in need of money for further education. She can save, you remember this is the debt query that we were talking about. She can save up to 3,000 rupees a month. So therefore, she wants to know which is the best way to actually put this money to use over the next 2 years.
There again, I think it will depend on what exactly is the time horizon. Good thing is that she'll be investing on a monthly basis. If she has a couple of more years to go, then I would say maybe look at a category called equity saving fund category, which has around 20-25% in equity, and the rest is in arbitrage and debt, in a manner that arbitrage and equity is around 65%, so you get benefit of equity funds. Look at that. But if you don't have that much time, then don't even look at debt fund. In the debt fund, you can look at only short-term fund. Don't look at any duration fund or any other fund. You also have a fixed maturity plan, but you need to be very sure about your time horizon. So I would say that if your time horizon is 1 or 2 years, look at a short-term income fund. If you can invest for 2 to 3 years, look at a good quality equity saving fund. You can look at Kotak Equity Saving, for example. So your category decision should be based on your time horizon.
All right, Revika, hope that answers your query, and do keep
all the
writing.
very best.
And all the very best, of course, and do keep writing to us. We have one more query coming in from Visu Iyer. Again, this one from Facebook. He wants to know which are the best mutual funds to give regular, monthly or quarterly dividend. There's been a lot of, confusion as to is it a good idea to put some money into the dividend fund? Would you explain a little more into how these dividend funds work, and is it a good idea? If yes, then which is the best one?
I don't think this is the dividend fund they're talking about. It's just every mutual fund, I suppose. Correct me if I'm wrong. It's just mutual fund, which payout is better?
I think it's looking at basically generating some regular income.
Yeah.
Okay.
Look, I think generating regular income is becoming very challenging nowadays. As far as the mutual funds are concerned, there are two ways you can actually do it. One is either you can opt for dividend payout option. So there are funds which give you monthly, quarterly and half-yearly dividend depending on your requirement. If you're looking at monthly, there is a monthly option. The second option is opt for systematic withdrawal plan. Let me just explain briefly here. If you're investing in any equity-oriented fund, for example, like equity saving or balance advantage or balance fund or equity fund, there's a dividend distribution tax of 10% plus the researcher. So it comes to roughly around 11.6. Now, every time the fund pays you dividend, the fund has to pay dividend distribution tax to the government, and the remaining comes to you. So obviously, it brings your what comes into your hand lower by 11.6%. If you look at systematic withdrawal plan, what happens there is that you allow the money to grow over a period of 1 year, and then enroll for systematic withdrawal plan, where you give instruction to the fund house saying, I would like to have 10,000 rupees per month. Now what it does for you is, despite being in the market linked product, you are very sure of getting 10,000, which may not be happening in the dividend option case. And the second is your tax incidence will be much lower. So look at the right option, but I think importantly, you need to look at the right fund. So if you're looking at an option which can give you regular income as well as growth, as I mentioned earlier, depending on what your time horizon is, then you can look at balance advantage or a balance fund. If you can allow money to grow for a year, allow it to grow in growth option, then set up a systematic withdrawal plan so that your tax incidence will be much lower as compared to dividend option.
Yeah, that's true actually, and use every vehicle optimally, and don't use an investment vehicle for creating a regular income. Hemant, thanks very much for joining in. Thanks for your advice. We'll take a very quick break. Come back in a bit. Do remember, you can also email us all of your mutual fund related queries. We'll address it on our show, which is lined up now on Thursday. Do stay tuned. Up next, we talk about all the stocks which are in focus.